On the subject of the Dubai real estate being a bubble or a potential correction, I think it remains for the vast majority speculations. And this speculation is engineered by two factors. The first one will be the social media hype. So, what happens? You will have an expert that has done his research and made a publication, for example, highlighting that a certain segment of the Dubai real estate market will face a certain level of downturn, maybe because of the oversupply and several factors. And then you have this other category of people that did not fully understand what the expert is talking about and take that information and just propagate it and generalizing that the Dubai real estate market is in a bubble and is about to crash. And what happens is that that information will now take over social media and expand and instigate fear in the heart of both the investors and the home users. Well, for every investment or for every sector, to check the strength of every sector, you need to see if it aligns with the vision of the government, in this case being Dubai. If you are a student of the Dubai vision, you will understand the impact or the connection that the Dubai real estate has with the various agendas. We are looking at the economic agenda, the D33, and the urban master plan, the 2040. The second point or the second origin of this assumption will be for those that study charts. They say the Dubai market goes through a 7 to 10 year cycle where there's a bloom, where the bubble eventually there's a dip and all that. Hence, they associate the 2008, 2014 with 2026, which in my own opinion is not very accurate. So I've established here, to do justice to this, I've established a comparison between 2008 and 2026 based on 5 pivotal corridors. The first one will be infrastructures. So looking at 2008, it was the height of the financial crisis and the Dubai real estate market was heavily affected. Hence, we had more of promises. So there were no metros, no roads, etc. But fast forward to 2026, we have 2 metro lines that are actively operational. We are looking at the green line and the red line. We have the third one, which is a blue line that is at the moment that we speak, is at 12% completion, estimated to be handed over by 2029. We have the busiest airport in the world. We also have the largest budget cycle. We are looking at the 2026 to 2028. Yes, so the Dubai government has allocated over 302 billion AD for the development of the city. We are looking at 48% of that budget for infrastructures alone. The second point we'll have to look at will be the population. 2008, as per the data that we have here, the population was 1.7 million. And it was a combination of those that are seeking for jobs, maybe it's construction and thereabout. Fast forward to 2026, we have an estimated population, or we are forecasting a population of 4.2 million, which is a blend of long-term residents and family relocations, which the family ratio stands at 5.1. The third point we'll have to look at will be the regulation. In 2008, there were no escrow accounts. The down payment was 5% only, and there was no accountability from the side of developers. So the developers could run away with the money. Now, fast forward to 2026, we have mandatory escrow account. We have project audit, meaning the project is being audited from the beginning till the end. And also we had the establishment, not in 2026, but these bodies exist now. We have the RERA, we have the Dubai Land Department that are there to regulate and to ensure that the investment of the end users, or both parties, both the end users and the developers, are secured. The next thing, or the fourth point we'll look at, will be the economy. In 2008, the economy was fixated on oil and construction. Fast forward to 2026, the economy is diversified. We are looking at the tech sector, the trade, and also the finance and hospitality. Now, just to put this in context, 76%, right, of the GDP is non-oil, meaning it's not dependent on the oil. We have the foreign direct investment and the greenfield investment, which Dubai stands at the top as far as the foreign direct investment is concerned. We are also looking at a massive migration of millionaires and billionaires all over the world to Dubai. The next thing we'll need to look at will be the leverage, right? In 2008, we had a systemic risk where 90% of the mortgages were standard. Now, fast forward to 2026, we have healthy equity. The cash buyers are much more dominant. In conclusion, will there be adjustment? Yes, in some areas only. That's why it's important to know where you are buying, right? You need to choose growth over hype. You need to choose durability over and relevance over mere pressure.